Okay, everybody, welcome to the TSP Weekly Podcast for 10 September 2023. Uh, if you guys watched the show last weekend, you might recall Conan and I were talking about being in different locations this weekend, and I was going to be recording a podcast on my own. Um, I had said I was going to be going up to see my daughter at State College, Pennsylvania. She's a senior up there and a Navy ROTC midshipman. So I went up there to watch the Penn State West Virginia University football game. Had a great weekend with her. Went to a really nice barbecue on Sunday, and then by Monday night wasn't feeling too great, and Tuesday morning tested positive for COVID. So bear with me a little bit as I work through this. I'm recording it here on Friday, and so I'm 3 days into my second time having COVID. Second time is quite a bit easier, honestly, than the first time, but not something you ever want to go through once if you haven't already had it. So, at any rate, we will be back in the podcast studio next week, both of us. So, this week, we're going to take a look, basically, big picture. How do we make reallocation decisions? First thing you got to do is figure out market direction. That's difficult enough to do. The second step is selecting the funds, right? Which funds are you going to select? Assuming that you've decided that the market direction is up, which of the three stock funds do you want to be in? And then the third thing is, how do you do that with respect to the TSP restrictions? And the bonus chart is going to be Apple, and then we'll take a look at the weekly TSP fund charts. Right, so how do we make reallocation decisions? This is a technical analysis way to come to it, right? A lot of people talk to their friends around the water cooler or whatever, and talk about who's in what fund. This is a more methodical kind of way to do it. It's not the way everybody does it, but it's a way, and if you like it, great. It's the way that we do it here. So step one is market direction. So if we look at a chart of the S&P 500, okay, this is S&P 500 is the C fund. We're back here to November 2021. It's just for an example. It's a weekly chart. Each vertical tick, it's called, is a week of price action. And so we're trying to determine trend direction. And so in the big scheme of things, since the top here in 2022, we've had two general directions in trend. We had one down trend and one uptrend, right? In between there are smaller trends. We have a downtrend, an uptrend, a downtrend, an uptrend, another downtrend, right? So the way you identify a trend in general, a downtrend, you start at a high point, okay? The market comes down to a bottom, recovers, and doesn't get higher than the previous high. Okay, so it's lower than the previous high. That's your first indication. Once price gets down below the prior low, now the trend is down. Okay, so in this case, it kept going down, kept going down. So we have a series of lower highs and lower lows. Okay, that's what makes a downtrend. An uptrend is the opposite. We have a low, we have a high, now we have a higher low. So that's the first indication that we might have a trend change. Once we get a higher high, now we do have a trend change. Confirmed. Okay. And then it kept going. We have another higher low, higher than the previous low. And the next high is higher than the previous high. So this uptrend is in place. We have a low much higher than the previous low. So that the general trend since the October low is up. Right? So the direction of the trend until it changes is the direction that it is. That's it depends on the time frame you're looking at, right? So in this time frame, it's a weekly chart, and we're looking at 2 years of price movement. And so over that 2 years, in the big scheme of things, we had two trends, one downtrend, one uptrend. And we're still in the uptrend. Okay. So that's pretty much how you determine trend in the big scheme of things. Okay. If we look at the three TSP stock funds, so the C fund is in candlesticks. Okay. The I fund is light blue, and the S fund is in orange. Okay. So generally speaking, the stock funds come down together and they go up together. Okay. It's a big generality, but generally speaking, they all came down together in 22 and they all went up together in 23. So obviously, there are times in here when one fund outperforms the other fund, right? The C fund, particularly from this point right here, from May of 23, the C fund kept moving much higher. The I fund flattened out and leveled off, and the S fund really never got moving very much off the bottom. So ideally, we would want to be in the C fund this year, right? 23. The C fund has clearly outperformed the I fund and the S fund for the year. So the tricky part is knowing, or can you know, which of the three funds are going to outperform the others? So generally speaking, the easiest way to do it, because it's very difficult to determine which of the three funds are going to outperform the others, the easiest thing to do is when the C fund is in an uptrend, evenly distribute, if you're making a reallocation, evenly distribute between the three stock funds. Sometimes, because you don't know which fund is going to outperform. So if we look at this section right here, the C fund moved up, had a pretty good advance, but the I fund way outperformed the C fund during that time period, right? And the S fund underperforms both of them, but the I fund really outperformed the C fund during this time period, September, October, November of last year. And then it leveled off, right? It leveled off and basically went sideways, but the C fund kept on going, and the S fund never picked up. So again, in general, if you can't figure out, and it's very tough to do, if you can't figure out which of the three funds is going to outperform, the simplest way to do it is to evenly distribute between the three stock funds when I use the C fund as the standard. So when the C fund is in an uptrend, the simplest thing to do is to reallocate evenly between the three stock funds. Okay, but let's say you wanted to try to figure out which of the three funds is going to outperform and be in that fund. So the next step would be fund selection. So the way you would figure it out, this chart is SPX is the S&P 500, it's the C fund, divided by the S fund. So we're comparing the C fund to the S fund in this chart. Okay, so it's not a chart of price over time. It's a comparison chart between those two funds. So what that means is when the chart is going down, the S fund is outperforming the C fund, right? Because the C fund is in the numerator. When it's going down, it means it's underperforming the S fund. Okay. When the chart is going up, it means the C fund is outperforming the S fund. Okay. So that's the first part of it. But here's kind of an important piece. This section right here, that was COVID. Okay. So if you look at this chart by itself, what it looks like is the C fund exploded higher during COVID. And we know that's not the case. What it means is the S fund did so much worse than the C fund during the COVID meltdown that a comparison chart shows the C fund doing really well, right? And on a relative basis, the C fund did much better than the S fund. So what I'm saying is you first you have to have a chart of the actual chart of the fund to see if the fund is actually moving up or down. Because even if the C fund is outperforming the S fund here, we still don't want to be in the C fund during the COVID meltdown, right? We definitely don't want to be in the S, but we don't want to be in the C either. So I'm just reinforcing this because this is not a price chart. It's a relative chart. It's relative, the C relative to the S. Okay. So assuming that the market is actually moving higher, and now we look at this chart in a relative basis. Okay. We have once the C fund relative to the S fund topped out, now the S fund started to outperform the C fund, right? Because if you remember, in 2000 and before the tech sector peaked in early 2021, the S fund was crushing the C fund, right? And that's what this represents. So if you could have looked at this, chart and doing the same kind of analysis that we do, we have a breakdown through that 20-week moving average line. RSI had gotten below 50, MACD had already crossed negative. So in this case, at this point, you might have gotten out of the C fund and into the S fund. And that would have been the best choice because the S fund outperformed all the way down here until early 2021. And then if you could see also a chart of the S fund at its peak in 2021, it flattened out, but the C fund kept moving higher, right, until 2022, because 2022 was the top of the market in general, right? So the C fund was outperforming the S fund until the top in 22, and then the S fund rolled over harder than the C fund all the way through. So the C fund kept outperforming, even though the market was going down during this time, right? From 2022 to October 2022 was the bear market. On a relative basis, the C fund was still outperforming the S fund. Okay. So you have to keep both charts in mind, basically, the actual chart of what's going on and the relative chart, which is this. Okay. So again, just from a relative perspective, we had a pretty nice breakout here in the S fund in January. And the C fund, which was being led by the big seven, Apple, Amazon, Netflix, Google. C fund broke out and had a really good rally relative to the S fund, and then it's pulled off, in the last few months. So a relative chart is really useful, especially a weekly chart is probably more useful than a daily because I wouldn't use this so much for timing exactly. Basically, you would want to pick the points where it really makes a difference, the breakouts, and then if you were going to consider changing the allocation of the three, evenly distributed between the three funds, on the big breakouts, you might reallocate. So in this case, when we had this big breakdown in the C fund relative to the S, this might be a time to reallocate to 100% S fund. Then we hit a bottom, right? C fund started to recover relative to the S fund. And then maybe, this wasn't a whole lot happening here, but by this point, the C fund was way outperforming. And so on a relative basis, that's where you would have moved, back from 100% S to 100% C, let's say, just for example. And the same thing here, right? C fund really took off. This would have been a good time if you were in the S fund to get out of the S fund and go into the C fund. Okay. So this is a chart of the C fund versus the I fund. Same kind of thing. C fund has been on a long-term chart. answered a question on, I think it was Instagram, about has the I fund ever outperformed the C fund? And yes, back in 2002 to 2009, the I fund absolutely crushed the C fund. And then following the bottom of the great financial crisis in 2009, the C fund has pretty much been outperforming the I fund ever since on a on a big scale. But when you drill it down a little bit, the C fund has been clearly outperforming the I fund until we get to this topping pattern right here, and then we have this huge candle, right? So in at the bottom in October last year, right, the I fund exploded higher relative to the C fund, right? So this is the I fund really outperforming the C fund for the last quarter of 2022. And then it's flattened out, and then the C fund, right, has since taken over and hugely outperformed the I fund for the last several months of this year. Okay, and then the last one would be the S fund relative to the I fund, right? I don't think this one is as useful, but if you want, if you use TradingView, I actually have a one of the tabs that I have open all the time in TradingView is 6 windows, and it shows all of these relative charts at the same time on the screen, so I can kind of see real time which funds are underperforming and which ones are outperforming, and try to figure out if it makes sense to use that in reallocation decisions. So in this case, the S fund was outperforming the I fund. For a while here, it was basically they were more or less flat, but then generally the I fund was outperforming the S fund after the S fund peaked at the top in early 2021, and then we got to a bottom here in May on a relative basis, and then the S fund has been outperforming the I fund, which isn't saying a whole lot because the C fund has been outperforming both of them, which is why I generally don't focus too much on the S versus the I, because the C versus the S and the C versus the I is what really matters. Okay, so that's how you would figure out the trend, second, which funds you want it to be in. Okay, and then the third step is the TSP restrictions. So there's a lot of confusion about this, and so I'm just going to talk through it. So there's basically only 2 rules in reallocating within TSP. So the noon rule is the easiest one, so we'll just talk about that first. The noon rule says that if you make your reallocation request to TSP, you get on tsp.gov and you make your reallocation request. You make it before noon East Coast time on any trading day, you're going to get that day's closing price. So whatever happens throughout that day, if it's, say it's 10 o'clock in the morning on a Wednesday, and you make a reallocation, you go from 100% C fund to 100% G fund, okay, at 10 o'clock in the morning. If the C fund goes up, you're in the C fund, right? And you made the reallocation to G fund. If the C fund goes down, let's say, during that day, and it closes down for the day, whatever that day's closing price is what you get. So you're going to take the losses that day in the C fund. Then you'll be in the G fund beginning that closing price. Okay. Let's say it's Friday and you make your reallocation at 2:00 on a Friday, right? 2:00 East Coast time. Now you're going to get the next day's closing price. So say you're 100% C fund at 2:00 on Friday, and the C fund keeps going down. Friday's closing price happens. You don't get that because you had to have your reallocation in before noon. So if you did it at 2 o'clock on Friday, you're going to get Monday's closing price. So if the market goes down Friday afternoon and then goes down again on Monday, you're getting Monday's closing price. Okay. That's the noon rule. It's the worst rule of the two. It makes it very difficult for us in TSP. The 2 move a month rule is a bit of a misnomer. What it is you have 2 reallocations per month that you can make. Any transfer between any funds counts as a reallocation. The first 2 moves you do, it doesn't matter what they are, they count. Okay, there's no arguing around that. If you go to the G fund, it counts as a move. If you go to the L fund, it counts as a move. If you move your money at all, it counts as a move. Any move you want to do after those 2 moves, you can only increase your exposure to the G fund, which means you have to decrease your exposure to something else. So you can do as many moves throughout the month as you want, but after the first 2, all you can do is increase your amount to the G fund. Okay. So you start off by figuring out what's the direction of the trend. Then you figure out which funds are outperforming the other funds. And then you figure out where you are in the month and how many moves you have remaining and how you can use them to maximize gains or minimize losses for the month. Okay. That is generally speaking the sort of analytical way you would go about making reallocation decisions. It's a little bit complicated, but that's the process that we have. Okay, if you guys have questions about it, definitely please put them in the comments, and I will get to them. Or shoot us an email at support@growmytsp.com. Okay, bonus chart is Apple. So why is Apple the bonus chart? Apple is the single largest contributor to the S&P 500. It's a little bit more than 7% of the weight of the S&P 500. So when Apple moves, it's moving a little bit more than 7% of the C fund. It's for one company to have one company out of 500 to have a 7% share is it's the biggest company in the S&P 500. So it's really important to kind of keep track of Apple. And so we're looking at a weekly chart back to 2020. Apple had a pretty good pullback during COVID, but it wasn't, on a percentage basis, wasn't anywhere near as bad as the market in general. And then, flip my screens. Okay. So it wasn't anywhere as near as bad as the market in general. And then once it bottomed out, Apple had been on a tear, right, ever since until the top, just like everything else, in 2022. And so a couple interesting things about Apple. This section is a consolidation. It's a consolidation pattern. It's not an impulse move to the downside. It's a consolidation, right? We have ABC, right? If you do 3 legs, if you do ABC, it's a consolidation. It's not an impulse. An impulse is 5 waves. Okay. So let me just flip to, this is the C fund, weekly chart of the C fund, right? Here's the top in 2022. 1, 2, 3, 4, 5. That's an impulse move to the downside. Okay. As opposed to Apple, which is ABC. Okay. So this ABC gives us an A. Then we have a B. Then we have an ABC for a C. So this whole pattern is an ABC correction. Okay. So if you were watching that, this double bottom in Apple was really big. And when it broke through that 20-week moving average line, RSI above 50, MACD crossing positive, every reason to believe that Apple would move higher, and it certainly did in 2023. So why it's important right now, I drew this horizontal red line. It's a support and resistance line. So this is a weekly chart. So basically, this is as high as Apple got, the top of that green rectangle. The next week, it was below. It was below the line. The week after that, it was above it a little bit. So it was oscillating along this line. Okay, it was hitting resistance there. Pulled back, came back up, hit resistance, pushed back again, came up, hit resistance, pushed back again, came up this time, and broke out above that resistance right there. Okay, and was above that line for a couple of months. Right. So now this red line is very clearly a support resistance level for Apple. And in the past month and a half or so, it's been banging along that red line. And so for this rally that we have going on right now to continue, Apple has to stay above that line. We had a pretty good recovery this week. It was a down week for Apple, but it was a big down week. It was down 6%. But it didn't close at the bottom of the channel, right? It pulled back up to the bottom of the rectangle. And the lowest it got during the week was right down to that support level. So, and also down to 50, the 50 line on RSI. So it's going to be really, really important for Apple to maintain support at this line, because if we get down here in Apple, the S&P 500 is going to be down there too. Okay. All right, TSP fund charts. So on a weekly basis, we talk about this every week. The blue line is the 20-week moving average line. Once after, this was the bottom from COVID, we're looking at the C fund, S&P 500. Once price got back above that 20-week moving average line, it stayed there, and that 20-week acted as support all the way along until this big breakthrough in January 2022. And then the 20-week acts as resistance, right? Price gets above it a little bit, but generally speaking, 20-week moving average line acts as resistance. So you want to be in the stock funds when price is above the 20-week moving average line, and you want to be out of the stock funds when price is below that 20-week moving average line. And so we had a nice breakout right in here, and ever since then, on a weekly basis, we've been above that 20-week moving average line. Came down and tested it for really its first test of support on a weekly basis in August, and that support held. This week we had a bit of a pullback, but we're still above that 20-week moving average line. RSI is above 50, and MACD is a little bit negative, but it's basically flat. The thing I'm watching mostly on a weekly basis here is RSI. I don't like RSI coming up and hitting resistance at that orange line. The orange line is the moving average of the RSI, and a lot of times what will happen is something like this. RSI will come up, hit that moving average, and roll back over. Or actually, in this case, probably more like this, right? If it can't get back above that moving average line, RSI rolls over. And so you definitely want to watch and see, because if RSI crosses below that 50, price will be down here below the 20-week, and we'll have a sell trigger on a weekly basis on the C fund. But we are not there yet. As of right now, we have good support and we'll see what happens going forward. S fund, same kind of thing. You definitely want it to be in the S fund. Well, it's above that 20-week moving average line, and we talked about on the relative strength charts. The beginning of 2021 was really the peak. Price did drift higher, and we had this blow off top. But the early 2021 was the top in the Nasdaq, and it was really the top in a lot of ways for the market. Once we actually did get below that 20-week moving average line, it hit every time it came up. It acted as resistance, had a little bit of an overage there. And the S fund has basically been flat for almost a year. I mean, this is it's a long-term horizontal channel for the S fund. It's definitely underperforming the C fund. And what's bad is that the S fund is about 4,500 stocks in the S fund versus the 500 in the S&P 500, and so the majority of the economy is doing much worse than the C fund makes it out to be. The C fund is really only outperforming to the extent that it is because of the 7 mega cap tech stocks that are driving it. I fund. This was the big outperforming section right here that we talked about on the relative strength charts, and then it basically went sideways ever since. And you can see from RSI, it never really got to an oversold level, and it's rounding with this rounding top. The thing about the I fund right now is that we had a sell trigger this week, that week right there in the I fund, and it didn't collapse. It didn't collapse over the past few weeks, but it hasn't been able to get back above that 20-week moving average line. And RSI is continuing to decline, and MACD is continuing to decline. So the I fund is definitely not the place you want to be right now. And then the F fund, same kind of thing. Once it got below that 20-week moving average line, every time it's tried to get above it, it's been rejected at it. RSI is clearly trending down. MACD is trending down. So at some point, we expect the F fund to do really well, depending on what the economy does here going forward. But we're definitely not there yet. Okay. All right. Hopefully that gives you guys an idea of basically the thought process is to, from a technical analysis perspective, to make reallocation decisions, the importance of Apple, and what the TSP fund charts look like at the moment. Okay, that is about it for me. If you guys have questions, please post them in the comments, and we'll get to them, and we will be back in the podcast studio next weekend. All right. Hope everybody has a great week.